Well, you're one of millions of people preparing to file your 2021 taxes. It's not too late to still save some money for 2021. And then, maybe even more importantly, it's definitely not too soon to be planning for 2022 taxes. All right, tip number one, you can still contribute to an individual retirement account, or for self-employed people, a simplified employee pension plan, a SEP IRA, for 2021 up to your tax filing deadline. So for individuals, that means you can contribute to an individual retirement account with $6,000 or as much as $7,000 if you're over the age of 50. Now, you want to be mindful though, there are some income phase outs. So if you're part of an employer-sponsored plan at work, so for example, if you have a 401k through your employer, you can still do an individual retirement account, but if you want to contribute and deduct your contribution, there are phase outs. And we're going to include a link to those phase out limits below the video. Now, for a SEP IRA, if you are a self-employed business owner, you can contribute 25% of your net earnings to a simplified employee pension plan. And that can have a really massive impact on your total tax bill for 2021. Tip number two, health savings accounts. Health savings accounts are a great tool that are tied to a high deductible health insurance plan. Now, these are very specific plans, and it's very important that you make sure that your plan is eligible to have the companion health savings account. The health savings account is a tool that allows you to contribute money to it on a tax deductible, tax deferred, and then tax-free withdrawal basis if you use it for qualified medical expenses. So many of us can no longer claim itemized tax deductions. And even when we can, it's very rare that you can qualify for a medical expense deduction. So using these health savings accounts is a powerful tool. So you want to make sure that your health plan is eligible for this, and then start a health savings account. As a reminder, these are not the same thing as the flexible spending account that many of you are familiar with from your employer plans. Those are those plans that you can use to pay unreimbursed medical expenses, and you typically have to use that money in the same year. A health savings account, you can roll into future years and use it later on. And I think that's where it's a real attractive usage. As we get older and maybe have more medical bills, you'll have this pile of money in your health savings account to help pay for those. One note though is, once you are a Medicare beneficiary, you've applied and start to receive Medicare benefits, you can no longer contribute to a health savings account, but you can still use the money in that savings account. All right, tip three, this is not a once a year sporting activity. Yes, we file our taxes every year. We tend to think of it as a big exercise, but I'd really like to get you into a posture of thinking about taxes from a long-term standpoint. So it's not just about saving taxes right now. It's thinking about what's the best way to save money over the long haul. So while you're in this routine of getting your taxes ready for your final filing, this is a great time to be thinking about 2022 and years forward. So think about tools like Roth conversions. Maybe it's time to be thinking about moving money from my individual retirement account into a Roth IRA to get some tax-free money for my use in the future. Think of this as almost like tax insurance. So I think those are great tools. Also, generosity planning is always a good thing to be thinking of. So if you're a fairly generous person who likes to give money to charities and not-for-profits, well, this is a good time to be thinking after you finish your 21 taxes to think about what lays ahead for 2022 and beyond, and how does my generosity fit into my tax planning. There's some really great ways to match up your generosity with the tax code to ultimately magnify how much you're able to give to charity. I hope these tips are helpful for you and get you into a great posture of thinking about not just your 2021 taxes, but looking beyond to really magnify your tax savings over the rest of your lifetime. As I always like to think of it, $1 I save in taxes is just as good as $1 I earn in the investment markets. So if we can get our investment engines working in the same direction of our tax tools, well, then we've really accelerated the success of our financial plan. So if these tips have been helpful, we have other great ideas for you on our YouTube channel and on our website. Let us know how we can help.